Traders, what is going on? Excited to have you guys in here today. It's Kevin Avery, Avery Day Trading. And Diamond Hands, I got a message for you today. Avoid this common mistake that's going to happen a lot in 2021. Let's get to it. There were a lot of wrong lessons learned at the start of the year, and this is going to be an unpopular opinion. Something maybe you guys don't want to hear, but you need to hear. I'm about telling you guys the unpopular truth versus the popular line, which is where, the 90%ers love to reside. Now, we're going to get into the diamond hand trades that happened this year, actually January, end of January. And let's go over to the screen now. This was GME, obviously, GameStop. You guys are well aware. Everybody was well aware. People who don't even trade were trading this. And people that don't even know what trading is knew about GME, GameStop. You get messages from everybody. So, obviously, GameStop, you guys are well aware. We don't have to go over this, was short squeeze of the century. 200 and some percent of their float was short. And we've been seeing a lot of these squeezes happening after the pandemic. There were a lot of people shorting these stocks because everything was going to zero. And they got so heavily shorted that the squeeze was inevitable. We saw KOSS, very similar thing. AMC, here's the daily chart there. AMC actually holding up, turning back around, doing fairly well at the moment. Was SNDL, very similar there. And so what is going on here? If you guys made money, well done. Great work. But I got to say, there were a lot of wrong lessons learned. And just because you made money doesn't make it a good trade. We need to get into this. This is process-oriented versus results-oriented trading. This is a very important graph I'm going to show you guys. It is something that helped me when I was first starting to trade. And this can be a lesson learned, green trade or red trade. But the problem is most people will take the money that they made on GME or AMC, this anomaly, the black sheep of the market, and they're going to lose it all in 2021 because they're going to learn the wrong lesson and they're going to take what they learn and try it on everything else. You can't just buy any stock that's up hundreds of percent and expect it to go higher. Buying high and hoping higher is not a very sustainable strategy in the market. Trust me, been doing this a while. And so I want to help you guys protect the profits that you made if you made them. Now, when I was going through grade school, let's say I didn't study for a test or quiz and I aced it, and I would say, well, naturally, what's instinct to say, well, I don't have to study for the test. Let's say if I ace the quiz, I know the material. I'll do fine. I just did fine on this, and then the test comes and you flunk it because you got really lucky. That's what happens similarly when trading. Let's say you have a green trade. You're like, I don't need to study. Look at me. I know what I'm doing. Bought GME at 400, sold at 450. Come on now. Guys, we need to learn even if it was a green trade. I want to help protect your profits moving forward because I'm not saying that it wasn't, maybe I am saying that. It was a trade that's very, very rare. So let's learn how to trade. Let's make the money on those tickers. Great work, but now it's time to learn how to trade. Why professional traders are process-oriented? Well, let's look at the chart. Results-oriented says amateurs only focus on the outcome. Yeah, this is exactly right. So amateurs in day trading, all they see is profit. They don't even look at risk. They don't say, oh, I'm buying GME at $400, diamond hand style, baby, YOLO. They're not thinking about the risk involved with that and that, is this accurately valued at $400? Most traders that are amateurs, they don't consider the risk. All they see is profits. That's gamblers. They're just spinning the wheel. Whereas traders, they predefine the risk before ever entering a trade. Very important. So amateurs, let's look at this. I lost. It's a bad trade. I won. Great trade. Well, there's a few problems with this. Okay, you're starting the sentence with I. That's ego. Ego gets in the way of trading. Ego is very detrimental to your trading. When you're in a trade, you can easily marry a ticker if I precedes the chart, right? You're like, I'm not taking a loss, or I won. Amateurs, they want to win. Professional day traders, they just want to make money. It's about making money and being disciplined enough with a consistent edge to make that versus Starting the sentence with I lost, I won. Okay, next, it's a bad trade because you were red, or it's a good trade because you were green. That's completely wrong. That's results oriented, saying green trade, good trade, red trade, bad trade. Well, let me ask you guys, would it be a good trade if, let's say, you took a trade and you broke all your rules? Let's say your stop was, you bought GME $300, your stop was $275, it came crashing down to $200. You added more, came down more. You guys know where it went, $50. You added some more, and it popped back up, and then you made money. You got a better average, but you broke every rule. Amateurs, they adjust their risk parameters mid-trade. Professionals don't do that. Is that a good trade? No, it's not. Did it make money? Yes. But doing that, adding to a loser like that and going against your risk parameters, that is going to blow up your account eventually. It just will. So bad trade, wrong lesson learned. If you don't learn from that and you move forward with your trading, you're going to be crippled. You're going to blow up your account. And so results-oriented traders, they miss important learning opportunities, tend to be impulsive, and do not have a long-term mindset. All right, let's go into process-oriented. Professionals judge their trades by the way of how they made their decision. Did I adhere to my trading rules, or did I break them? I mean, yeah, you can break your trading rules, be green, and you understand it's a bad trade. You can have a bad green trade, terrible green trade, and actually a great red trade. See, no one's 100% consistent in the market. It's just about learning how to stay disciplined enough to manage your losers and extend your winners. They say minimize your losses and allow your profits to have maximum upside potential, meaning set trails, take profits along the way. But with your stops, as far as managing your risk goes, single exits, take the loss, cut it, don't add to the position, unless that's part of your trading plan, scaling to position size. So they adhere to their rules, winner, well done. If they adhere to their rules, loser, no big deal. There's no emotions. It's not like, I lost. It's like that emotion. I lost the trade. My life is over now. I took a loser. I took an L. You take it personally, You're nearly married to the ticker. We have to unmarry these tickers. Don't ever be married to a stock. That's going to get you in trouble. Just be married to the price action. Be married to your discipline. Be married to your risk guide. Those are the things you need to be married to. Not, spin the wheel, baby. This thing's going to $1 million. I'm going to hit the jackpot. Got to be careful with that. So you broke your rules. Winner, I was lucky. Lost, that's what I deserved. Exactly right. So I say this quite often because a lot of newer traders as well, they don't predefine their risk. Or even if they do, they'll adjust their risk parameters mid-trade. For instance, GME, and let's say they were just adding. GME went to zero. Well, guess what? They blew up their account. There is not one trade out there that's worth your entire account. What you need to do is look at the big picture. The big picture says, okay, after 1,000 trades, I'm green on 700 of them. I'm red 300 of them. Okay, I have an edge. I'm consistent. I'm 70% green. So let's maximize those winners and minimize those losses. In fact, and some of you may not recognize this, you can actually have a consistency rate of, let's say, only like 30% or so, as long as your winners versus your losers are, as far as your profit taking and losses go, are very different. If you're 1-to-1, bad. If your winners are very small and your losers are very big, that can get you in trouble too. So it's about balancing a few of these ideas, a few of these things out to really allow for that maximum upside potential. But I will say, moving forward throughout the rest of the year, we have to eliminate ego. If you guys want to see consistent profits moving forward after the GME, SNDL, AMC, KOSSs, you guys have got to start predefining risk. And you got to understand that these are anomalies. They're not going to be happening but maybe once a year or once every few years. I know you may have been introduced to the stock market with these tickers, but that's why I'm helping you guys out, because I want you to protect your profits moving forward. It's one thing to make money trading, but it's another thing to protect that money in trading. Those are two huge things. Make money, protect the money, because some people are very good at making it, but then they can't protect it and they lose it all. So moving forward, guys, let's protect those profits that we made from these plays and trade smart. Stick to our trading plans. Be process-oriented versus results-oriented. I hope this video helped you guys out. Let me know in the comment section below how you did. And moving forward, what your thoughts are and how you can become a better trader from this, whether you were green or red. Love you guys. We'll see you next time.